Well, gentlemen, it was certainly an interesting quarter, and there's a lot happening in the world. And one of the things that the themes of our conversation definitely was the potential impact and uncertainty around tariffs. Where do we, well, I'll start with you, Stan. Where do you feel like we're headed, and how do you think that that's going to play out?
Well, I think it is rather interesting that tariffs initially were viewed as very negative, and our markets dropped dramatically. Then tariffs started to become kind of accepted, and then the lower courts get involved and decide that maybe he doesn't have the right to put in tariffs. I think one of the things that Matthew covered rather nicely was what happens if the higher court upholds the lower court, and then in turn the tariffs have to be refunded and the whole thing has to be turned around. And it did leave me particularly, and I think all of us, with a question: are tariffs good, bad, and what happens if they go away?
Well, Len, what do you think about that? Are tariffs good, bad, and what happens if they go away?
Well, I mean, if they go away, there's a lot of unwinding that needs to be done, which could indeed get a little bit messy. No question about that.
Yeah.
Are they good or are they bad? You know, the impact of the tariffs, I think, at this point is relatively uncertain still. Even looking at the economic data, you know, tariffs inherently tend to be inflationary. We haven't seen a lot of inflationary impact on them yet, but some of the reason for that is that a lot of suppliers ended up front-loading, trying to beat the tariffs, and had a great deal of additional inventory on hand so that they were able to get around it for a period of time while they were waiting to see how things played out.
And do you see that as a risk, an inflationary risk, as we move towards the end of the year and beginning of next year, that the inflationary piece of the recession or the tariff puzzle is likely to hit?
I think if the tariffs remain intact and it's upheld, then it's hard to not believe that they're inflationary because the numbers are so huge.
Yeah.
So, yes, I think, but again, as we look at what's happening in the marketplace is accepting that part of the scenario at this point.
Yeah, well, one interesting element of the tariffs is its interconnection with how the One Big Beautiful Bill has been put together. And I think Matt pointed out that one of the newer risks to tariffs being struck down would be the fiscal the part of the federal budget that is now dependent on tariff revenues. And let's assume that, by the way, that the case that's currently pending before the Supreme Court, Learning Resources, Inc. versus Donald Trump, and whether he does have the authority under the International Emergency Economic Powers Act to prosecute these tariffs. What do you see how would that play out? How would the market respond in the event that Trump's authority is held invalid, that he does not have the authority to unilaterally pursue these tariffs?
It's an interesting question, and one that I think most likely can be answered with volatility, right? I think one way or another, the markets are going to take this as a sign of uncertainty in terms of what's going on going forward, even if it adds a little bit of additional stability in terms of how tariffs may get implemented in the future. The big concern with unwinding these tariffs the way that it was described is that, you know, as you were saying, a lot of the revenue in the Big Beautiful Bill, for lack of a better name, is that it is dependent on these tariffs. And if that revenue is not there, the U.S. is going to face additional deficits, additional shortfalls, and an increase in our national debt. And that can't be considered a positive.
Right. Well, I think the uncertainty would be very similar to what we got after Independence Day. Markets
Liberation Day.
Liberation Day. We had such a large amount of uncertainty, the markets reacted very, very negatively. I would think if the Supreme Court upholds the lower courts, then the uncertainty, because it's never been done before, is going to be dramatic.
Right.
And so I think that's something that we have to think about and something we have to deal with. But right now, that hasn't happened.
So we met on the day that the Federal Reserve, we were meeting at the moment that it decided to cut the federal funds rate at 0.25%. And, the Fed's dual mandate on inflation and employment, they seem to be trying to straddle that mandate. Looking into down the road in the next few quarters, how do we see the Fed behaving, and how do we see the markets responding?
Well, I think the Fed's probably going to continue to lower rates, but not as dramatically as some people would like them to. But I think that's something that's going to happen. We're going to see lower rates at next meetings, probably the next 2 or 3.
And I would agree with that. I think it's going to be data-driven more than anything else. I think that if you end up seeing a significant increase in inflation for whatever reason, or an additional decrease in employment, one way or the other, that's going to drive the Fed's decision, maybe stronger in the direction they want to go or contrary to what they were planning to do. But assuming everything is going to go according to plan, I think the Fed's plan at this point is to continue to lower rates a little bit.
Got it. And then let's cover one more topic, which is on everybody's mind, which is AI. Let's see, the adoption rate seems to be rapid, and it certainly seems to be juicing the market a little bit. And then from a valuation perspective, where do you see the AI growth curve happening right now?
The AI situation is an interesting one because valuations in large U.S. stocks are at extremely elevated values right now, according to historical norms. Revenue in a large part is anticipated to support this, although, for the valuations to be where they are, the revenue is not yet caught up to where the stock has been bid up. But it's not the same kind of a situation as you had in 1999 when everything was being bid up and there was no revenue behind it. There is an anticipation that this technology is going to, be a changer in a lot of ways, and these stocks are reflecting that. The concern is that in a lot of ways, the market has been bid up primarily by these few stocks. It's very, very vulnerable to just the future and the impact on a handful of companies at this point. And, it would be, I think, healthier for the market to be in a more broad-based kind of situation.
You mentioned large companies, though, in AI, and one of the examples of where AI is not moving forward as quickly as most people think it should is in Apple. The Apple release of their new phone indicates that they're going to get kind of nice growth from the phone and stay away from AI, which they've been widely criticized for not being as advanced in AI as most other companies are at this point.
Interesting.
So I think AI it's going to be very, very important, but maybe not quite as important as we're kind of thinking as of right now that it's going to take over the world.
Interesting. Well, as always, these conversations are fascinating and fun, and we'll look forward to having it again next quarter.